So Brendan, we're here today to discuss a big milestone that we've hit as a firm, which is that we've just surpassed $1 billion of revenue that we've driven towards our portfolio companies by way of connecting them to the other half of our ecosystem, our LPs. But I want to talk a little bit about how we got here and really the vision that you had when you started the firm. So going back to days of Blackstone, which is where we actually both started our careers, I'd love to hear kind of what about that experience and that exposure led you to create a view on what value creation could be, and also how it may or may not feel different to actually create value in venture capital.
You know, the genesis of fifthwall was very simple. It was this idea that if we could connect the largest owners and operators and developers of real estate to the tech companies that were trying to sell into them, we could create all this value for them. Now, the way we approached that was we brought them in as LPs. But I had worked at Blackstone, obviously in their real estate private equity group, and I had seen how, they created value. But the thing I also saw was how much real estate they controlled. And by virtue of that, how much they could actually influence the growth of tech companies. And this actually happened right as I left Blackstone. So when I left Blackstone, Blackstone made an investment in a company, VTS. And in the process, I would say that became like the archetypal deal for fifthwall, because it was the largest owner of offices in the country, investing in this new emerging leasing and asset management platform for offices. And it catapulted that company, in terms of its growth and its revenue and everything. And so I saw that deal and I was like, wow, what an amazing concept. What if we could replicate that at scale? And that was really the genesis of fifthwall and everything that kind of we built around these large real estate owners.
So similarly, you're going to remember this, like the idea of generating alpha was big at Blackstone, but then also saw that that was not just smoke and mirrors, that was very much a reality, being a part of the asset management side because of the scale, because of the dry powder that we had, because of the talent. There were just deals that we had access to and could act on faster than any other asset manager in the real estate space. So how has that view of generating alpha in that form and fashion, how has that informed your mindset as you develop a place like fifthwall and the thesis which it sits upon?
Yeah, so great question, because I think the alpha that you see in traditional asset managers and more traditional, more scaled asset classes like real estate and private equity, it's quite different than what you actually see in venture, which is probably a generous way of saying that in venture, there's not a lot of alpha. And a lot of the GPs out there, it's just not clear to me, or it's certainly not obvious to me, what their alpha is. They all say, well, we help our founders, or we have access, or we have some kind of proprietary way of looking at deals. But in the end, it seems to be highly speculative. And there's nothing that is truly defensible in any given firm's strategy that seems to actually scale, where you can make money by virtue of investing in a company and take that same model and repeat it over and over again. So what I wanted to do was import the thesis that Blackstone had, that ethos that Blackstone had, that we can durably and repeatably create alpha for our portfolio companies in venture where it hadn't been done. And the way I approached it was around distribution and revenue. To say it's very hard to predict what companies are going to be successful, but what you can predict is what real estate companies do, what technologies they engage with, and they basically integrate into their companies. And that was the core of where we started fifthwall, but also what evolved into our platform function.
How did you actually start to convince, though, going from 0 to 1? Like, you have this idea of this venture firm, but how do you convince real estate owners at that time to actually join your vision that tech wasn't like a step function efficiency accelerator, it was actually like a long-term strategy for their companies?
Yeah, so it started, I would say, with just exposing them to all the technology that was out there. So when I would sit down with large institutional real estate owners, whether they were a public real estate company or a private investor, what I generally sensed is they didn't know the vast majority of the technologies that were emerging from the Silicon Valley innovation ecosystem, that there was this chasm between these two spheres, the tech world and the real estate world. And so the first thing was just introducing them to everything that was coming out of the innovation economy. And I would say that in turn spurred like an overwhelm from them, which is, oh my gosh, there's all these companies. What should we use? What's relevant? What's not relevant? And the role that fifthwall has taken on, and I'd say has built really high trust relationships around, is like acting as a advisor, right? And as a kind of trusted counterparty who can help real estate companies navigate this broad, ever-changing, oftentimes confusing ecosystem of new emerging proptech companies. So from the outset, that was the vision. As we sat down with CBRE and Prologis and Lennar and Hines and Host, and we said, we're going to be your eyes and ears around everything coming out of the innovation economy. Help us basically almost curate for you which technologies you should be focusing on. And that was something they needed.
It's probably an unnatural conversation in the beginning of, these real estate owners are raising money for their funds. They're deploying it by buying real estate, by fixing it, by selling it. They're not typically writing checks into venture capital funds. So I imagine there was a bit of a bridge you had to get over there. How did you shift their mindset from thinking of themselves as like passive financial investors into more active strategic LPs?
I would say that the critical insight was that unless you're investing, unless you're actually deploying capital, it's very hard to really acutely understand these businesses, meaning consultants can't do it. They don't have the incentives. And so there's something about actually taking an equity position and actually taking that risk that enables you to become, one, a much better, I would say, partner to these real estate companies in truly understanding these companies. But then also you have skin in the game. Like you want that company to succeed. And so partnerships, which never go according to plan, and there's always, complications and delays, like you want a counterparty that's gonna like help you navigate that. And I think Fifthwall has. Yeah. And that's been I think something that we've built over time as like a core competency, which is like our ability to invest enhances our ability to be good partners to, our real estate LPs.
Do you have an early example or like a very first proof point that you realize like, wow, this model is going to work? We've raised this fund. We're starting to deploy capital into portfolio companies. Is there like a particular strategic introduction that you made that you realized this is really going to change the trajectory of the company being the LP, the portfolio company, or both?
Yeah, one of our very first investments was Opendoor, which we invested in. And the way we got to Opendoor and first discovered Opendoor was Lennar, which is, I think at the time, the second largest home builder in the US, had built a program which was designed to incentivize second-time home buyers from Lennar. So assuming you had bought a 3-bedroom house, they wanted to build a program to incentivize you to buy a 4-bedroom house in the same community as opposed to losing that customer to another home builder. And we saw that, and the inherent challenge is, how does the existing homeowner get out of the home they currently own and do that efficiently in time to buy their new home? And we then saw Opendoor, which had this kind of almost foil complexity to it of like they were trying to identify home sellers who wanted to sell very quickly and would actually sell at a discount to fair market value in exchange for speed and certainty. And we partnered those two companies up and we structured the Lennar trade-up program, which was powered by Opendoor. At the beginning, it was very small, and I think it just started in Las Vegas, but that one partnership catapulted Opendoor's business. And there was a lot more to it than just that one partnership, but that single partnership enabled them to expand out of Phoenix, and I would say really set them on the course to IPO in the span of roughly 4.5 years. And that deal we have tried to templatize in terms of like how we bring corporates to these early stage companies and structure these partnerships.
Makes a lot of sense. And then, this is an example where we've gone very deep with both the portfolio company and the LP. I imagine then that the playbook that I now use oftentimes in actually distributing a product to the rest of our LPs and scale that way, even if it's small building by building pilots versus like deep into the organization, that adds up for a portfolio company. Was there another example that you have of when you started to realize like, wow, the scale of our LPs and different asset classes or geographies is also going to benefit our portfolio companies?
So actually a great case study around this was Industrious. So Industrious we actually invested in from our first fund. And the reason we invested in Industrious was Hines had given us a mandate to go out and find a flex office provider they could partner with and white label in their buildings. And so we kind of held this bake-off between a number of the flex office and co-working companies, ultimately selected Industrious to make an investment in. What's actually fascinating is that then Industrious started to grow with fifthwall's other LPs, and actually LPs that were not intuitive to us that would be partners to them. So the best example of that was probably Macerich, which happened right away. So Macerich owns shopping malls, so the third largest owner of shopping malls in the US, and they had vacant space. And it was vacant space that was kind of hard to lease, and it was kind of a little far away from the other big box stores. And Industrious was actually a perfect use case because it created returning users and potential shoppers to the mall. And they were leasing these otherwise very difficult to lease spaces. And so Macerich became a landlord to Industrious. And now you would actually know the answer to this. Like, how many fifth wall strategic LPs are landlords to Industrious?
At least 15, probably more.
So it started with one single mandate, and now 15 of fifth wall's strategic LPs have become landlords to one of our portfolio companies. In fact, one of them even bought the company, right, which was CBRE's acquisition of Industrious earlier this year. So we've seen that it's almost like we have a network effect by virtue of this distribution that we have to real estate owners.
Makes a lot of sense. And I guess in this span of creating Fifth Wall into, when you were starting to get traction with a lot of these early deals, there were other kind of competitors that came about, some folks trying to do the same thing. Why do you think that it is that Fifth Wall has been able to scale in the way that we have while maintaining this level of depth and quality to our platform, whereas others might have not been able to contribute more value beyond just capital?
It's probably two things that are obviously very synergistic with one another. The first is just good investments, right? To scale an asset manager, you have to repeatably make good investments. You have to generate exits. You have to have IPOs. We've been very fortunate to have a lot of exits, a lot of IPOs, sent back a lot of capital to our investors. So that's kind of like almost the precedent answer. But I'd say the more nuanced answer is that those network effects I referenced before, I think those have really played a role in our ability to support a net new strategic LP. So meaning any given owner of real estate that has never done venture before can get onboarded very quickly into Fifth Wall's ecosystem. We've made now over 150 portfolio investments. We have looked at thousands of companies. So they get to benefit and draft off of that immediate base of knowledge that we have. And so I think that's kind of almost created like a brand gravity around us that's attracted more and more real estate owners. So it's hard to say that, one solution is the right solution. It just seems that our solution tends to attract more and more real estate owners.
What is one thing that you wish that every real estate CEO in our portfolio and also beyond, just what they understood about the tech industry today?
How quickly it moves and how quickly it changes. And, well, I should say two things. One, how quickly it moves, how quickly it changes, but also how difficult it is to actually discern viability. Meaning, it is so often that we talk to real estate owners who are really excited about a technology that is likely not going to be around financially for another 6 months. And the problem with that is that that's extremely costly, right? If you actually structure a partnership with a company that doesn't survive, that is the most costly thing you can do. And there's kind of no two asset classes that are further apart than real estate and venture, because in venture you're dealing with like loss-making companies that are super high risk that may or may not succeed. And the real estate mindset is you own assets and you have a kind of permanency and a durability to your business that is kind of hard to square with what you see in the volatility in venture. And so a lot of times real estate owners assume a stability in the venture capital ecosystem that just isn't there. And a lot of what we do at Fifth Wall is, I think, help them understand and ideally price and consider the risk of these partnerships if they're not partnering with the right companies. And I imagine that's something you've seen because you've probably looked at a lot of potential partnerships where you're looking at the company and saying, this isn't the right partner because it's just too risky. Do you see that a lot?
Yeah, definitely. I mean, our LPs appreciate when we're honest, and same thing with our portfolio companies. When we see an opportunity, we're excited on the first call, but we walk away from it, hear the LP's opinion of like how they're actually reacting to the technology, where it fits in their priority level, and then just knowing the landscape of maybe how many other companies are trying to do the same thing. We have to be trusted partners who are going to make sure that those LPs deploy technology that's going to be around in 5 years and 10 years. So very critical to our credibility is that we're honest and upfront about the space that portfolio company or startup plays in.
I'm curious also, you were asking me about how my experience at Blackstone informed the thesis behind fifthwall, but also because our platform function is so core to what we do. How did your experience at Blackstone inform how you've built fifthwall's partnerships and platform functions?
It's a good question. I really thought it was such a special place how, to your point, the scale of the real estate that was just involved. It was hard to keep up almost with the acquisitions and dispositions happening, especially where I sat, which was portfolio management. So I had a bird's eye view to really everything that was happening on the ground globally. And my job, which was really hard in the absence of a lot of technology at the ground level, was to translate a lot of those happenings in the portfolio into the good news and the stats that was coming out of it for our investors. So kind of sitting in between the investment side and the investor relations side. Having sat at Blackstone and understanding really like the complexities of an organization like that and what it would take to sell from portfolio to portfolio globally, and being able to use the language and translate that language from our LPs, from Blackstone to our portfolio companies is like an invaluable sort of translation that all of us at Fifthwall are tasked with doing.
And having been here now for obviously quite some time and having worked on probably more partnerships than you or I could even remember, how has our platform function changed over time?
I would be lying if I said it was the same than when I first started. I think I got here, we had just raised a lot of new capital. We had brought in a lot of investors. We talked about 7 or 8 in the first fund. That's since grown to 110 and is growing by the day. And then on our portfolio company side of things, there were like 30 or 40 companies we'd invested in when I started, and that's now closer to 150. So if we were going as deep with those companies in the same way, I think it would have broken at some point. Naively in the beginning, I thought like, okay, by nature of all these folks being in the real estate industry, the tech side of things, selling products that the real estate industry wants, I bet we can kind of put all of them in the same room, and I bet the right companies will emerge and the right partnerships will emerge. Obviously that, like in our first interaction, our first sort of go at that, I realized like this is going to take a bit more TLC. There's a lot of combing through the network that you have to do to really strategically match make. These folks are not just going to find each other in a way that just magically happens. So I think that's been a large learning curve to figure out how we can, in a scaling portfolio and LP base, how we can still intentionally and very intimately connect the right parties to each other.
And what signals to you that a startup is ready for commercial traction?
Yeah, I think this is a big part of figuring out where to focus. Is there's usually 3 key things we look for. This is going to sound really obvious, but our LPs hopefully have shown interest in this sort of area that the startup is playing in. And before we make an investment, that's what we're looking for. But ideally, when we make the investment, our LPs are really excited about it. They want to meet the company. There's just general interest there. We've heard at their priority list, their pain points. This focus area has come up time and time again. The second thing would be product market fit, which could go a number of ways. There's, the idea that this portfolio company hopefully already has traction in the real estate industry. Ideally, we're not just going from 0 to 1, like they're in a couple of buildings and then they're meeting like the biggest retail REITs or, hospitality REITs. Our LPs are the biggest of their kind. So it's important that we help bridge the gap. So if they have a product market fit, have a couple of enterprise customers under their belt, or even a middle market customer, but they have the story down. They know how to interact with owners and how to speak to and sell to them. That's a critical piece that we look for. And it ensures us that when we introduce them, they can actually scale to our portfolio, our portfolio companies can scale to our LPs' full portfolios. They can absorb that level of that quantity. And then the third thing I'd say is just founder willingness and like an understanding, founder willingness to work with us in a way where they can be collaborative, to translate, frankly, like what we're here to do to their sales teams throughout the organization so that The sales team knows that we are not there to compete with them. We're actually there to be an accelerator to what they do, to create leads for them. It helps them to actually keep us informed, to like really just keep us in the loop about where these things are going, raise their hand when they need help. There's just a type of founder who gets that model, and obviously that's just a pleasure to work with. So when any of those three things are going at the same time, it just creates momentum and traction. It's very obvious, it sticks out. And when those things are going, we like to just press play and really dive in where we can.
And have you ever had an instance where you thought a company was ready, but they weren't? And what did you learn from that?
Yes. Fortunately, we've learned from it and haven't repeated the same mistakes over and over. The things that we could do by way of our network is we could get really excited that, for instance, like a Series A startup that sells to multifamily players in the tri-state area, and they're doing really well doing that, is in the same room with the biggest German residential REIT, the CEO of that company, by way of, I don't know, our annual general meeting or any sort of environment in which fifthwall folks are in the same room. It's tempting, and I was tempted to get excited by their partnership, kind of push the portfolio company to pilot, and in Berlin in this case. And, fortunately, the portfolio company was very honest with us of like, we're going to try this one time. It might not work. We're going to refund the LP if this doesn't work. But we kind of pushed them a little bit more than we would have. It was an okay pilot. They basically went to the REIT and they said, we'll be back in 2 years. We need to work on our product and continue expanding in the US. But just to me, that told me like, okay, we could be a little more patient and trust the founder and what they're doing and not take their eye off the ball.
Right. And when you think about, our LPs that you've come to understand their pain points really intimately, what's the biggest pain point they're facing today?
There's two things. Internally, there's like a pain point internally that folks who are focused on innovation face, which we'll talk about. And then there's actual pain points at their building that they need to solve for. Obviously, the bottom line is most important here, right? So anything that adds ancillary revenue to a company, changes the NOI, changes the tenant experience, or reduces costs. Those are in a category that is generally usually helpful towards firm level goals. The problems that they face are, does this integrate? Is my team going to be fatigued by integrating yet another solution? How do I cobble together all these point solutions in the background in a way that doesn't feel clunky for my team internally or for the tenant? So anything in that area is what they're externally up against when they're interacting with the proptech world. Internally, these folks have a lot of discernment that they have to be really particular about. They have to choose what they want to put in front of their on-site teams and use their social capital internally very wisely. Said differently, these on-site teams who will actually be adopting the technology, that's something that's going to materially impact their day-to-day. So these folks who are heads of innovation or the operational teams who are focused on technology, they have to make sure that the technology that they're putting in front of their team and asking them to adopt is going to be something that scales in a way that's not going to be a headache for the organization. So in the same way that I have to be choosy about not spamming our LPs with opportunities and look at this, look at that, and dilute our brand, they have to do the same thing internally. I think that's a big focus area and a challenge that all of our LPs face, is navigating internally just technology of their organizations.
And one of the misconceptions I feel like when we talk about our model is, so you make intros, you do lots of intros, and it's not really an intro.
Yeah.
And I guess how would you explain how and why a fifth wall connection is fundamentally different than an intro?
The idea that we can not just say like, I know a guy who knows a guy and we'll try to put you in front of them, like how else can I help? This is very much like we know what our intros mean and we don't make intros lightly with the hopes that you connect, to my earlier point. When we're making an introduction to a real estate owner, it's because, again, they've expressed interest. There's an active person at that company who wants to dig in. And for us, our whole role is to put the portfolio company in the best position where we're not just cold emailing the LP and hoping that they answer. We're setting them up to a meeting that they're excited about. And in addition, we're prepping the founder with all the inside scoop about the company, right? Like, here's exactly what they said their pain points are. This is number 2 on their list of 5 priorities. Here's exactly their firm level target that they're trying to achieve. Why don't you think about how your solution plays into that? Just informing them and how they can speak to the company is really helpful up front. You're coaching them up front. It's almost like a boot camp when they're in that readiness phase of figuring out how they can talk to our LPs. And importantly, like they have to speak the language that catches the attention of a CEO or a management, which is like, not to say this is what our product does, like not showing any numbers. This is something that you need to materially show. How is this going to impact the bottom line of the entire firm? And so we help bridge the gap there. And then critically, the last piece of that warm intro kind of is the feedback loop, where we're meeting with these LPs on a monthly plus cadence, and we ask their opinions. Like, we heard you met with company XYZ last month. Like, what did you think? What was your biggest hesitation? Do you think there's a real pilot opportunity? If not, why? And all of those data points, whether positive or negative, we send back to the portfolio company, and that informs how they ideally will approach the next warm intro.
Is that something, because it's actually really unique, right? That we can, in some ways, mediate that feedback. And a lot of times, and I remember this when I was an entrepreneur, when a company doesn't buy your product, you kind of don't know why. It could be for good reasons, bad reasons. It can be totally capricious. Right. What we kind of do is help, I think, entrepreneurs get better in their pitches, because we're giving them that feedback because we're so invested in these relationships with our LPs.
Right. Right. And you're trying to also help them hone in on exactly like what their ideal customer profile really is. Like,
and
they
the proposition to them.
Exactly. Because it might start with like, you're selling to residential at large, right? That could be student housing, senior living, traditional multifamily, any of those sort of components of residential, single family. And they might think like, we built this to attack all of those different areas, when in reality, it's actually only like the senior living folks who this is becoming valuable to. Actually haven't had that example, but
right.
There's something that emerges, a subgroup of that becomes most interested in the product. And I think that's just useful feedback to provide the portfolio company. And by the way, the reason why that's so valuable is it's not like a couple of conversations in a vacuum. We have, again, like a proxy of the real estate industry as our LP base. So this is very much what these folks are telling you on the ground and how they're reacting to the pitch. You can take as a very credible opinion of how the rest of the industry will follow.
So we've brought in now $1 billion of revenue to our portfolio companies. And I know, and you certainly know, how much blood, sweat, and tears have gone into that number. But I guess when you look at that, all the partnerships you've worked on, what are some of the ones that stand out to you as the most rewarding?
Yes, so this one's near and dear to my heart, because when I was interviewing with fifthwall, I was asked to kind of put together a case study of what would I do if I were to be in a position to support Neighbor as the company. And we just invested in their Series B. This is almost like Airbnb. It's a marketplace for extra storage, right? It started at that time as a B2C company where folks with an extra driveway or basement would list their space on Neighbor, and anyone with stuff would occupy it. The reason why we made that bet was the B2B aspect, the enterprise level of demand and supply that we could bring to the table. So I envisioned that before, and then it was really fun and rewarding to now fast forward 4 years, and we've basically brought more than $2 million of ancillary revenue to our LPs as a way of onboarding them onto Neighbor. There was a lot of blood, sweat, and tears that went into that process in between. Right. I think the hardest was getting that first enterprise customer on board, and that was one of our multifamily REITs who helped us in the pilot and what the rollout looked like. They helped us in giving us feedback on what parts of the pitch resonated. And learning from that just made the next 10 customers, I think there's now more than 15 that they have onboarded onto Neighbor. It made each one easier and easier, while also making the sales cycle faster and faster on the Neighbor side of things. So it's a metric our LPs probably care less about, except that they come into our network, we introduce them to a few companies. To immediately have a win of monetizing vacant space in your portfolio within your first 45 days of working with fifthwall is pretty remarkable. And importantly, this is now one of the fastest growing business units within Neighbor. So just really proud of that one.
It's always cool to look back on your original vision for a startup, in this case, fifthwall for me, and this idea that, we can bring revenue to our portfolio companies. That was an idea that was unproven. That was a thesis we had that hadn't really been executed on. And now, with your help and with the whole team's help, we've brought in $1 billion of revenue to our portfolio companies. And that's a lot. These are companies that oftentimes have less than $5 million of revenue. This is a huge part of their business. And it's really cool to look back on that and say, it was 9 years ago we had this thesis, and 9 years later, $1 billion has flowed in from our LPs to our portfolio companies.
I think what's also been really rewarding about it is the fact that $1 billion, yes, that's a great number in terms of sales. Yes, we have a lot more to do in the next 5 years, but it signals to me more that this playbook that we have implemented and improved and tweaked works for portfolio companies, but more importantly, we've garnered the trust and minds of our LPs, and they come back to us time and time again to actually bounce ideas off of, to help them, cut through the noise in the industry. And so I think that's kind of a priceless piece of this that I'm most proud of, in addition to the number itself.
Yeah, the real estate industry is, by definition, this industry that's built on relationships. And what I'm very proud of at fifthwall is that we've inserted ourselves into that industry as not a real estate company, but a partner to real estate companies. And we've built these really long-term, high-trust relationships. We're now, one of our earliest LPs, CBRE, acquired one of our earliest portfolio investments, Industrious. And they've come into every single fund that fifthwall has launched. That's a relationship that we've built and curated and developed over years now. And what's exciting is I think we're going to see more and more points of contact around partnerships that we can bring them from that relationship.
Right, a full circle moment where actually everyone in that wins in the same way that you set out to create that sort of setup in the beginning.
It's just so exciting to think that, 9 years later, we have $1 billion that we brought into our portfolio companies, and how much value that's created, and how much value to our portfolio companies, and how much value to our LPs, and the relationships that have come out of it. So super exciting, and hopefully we'll talk again when we hit the next billion.